Welcome back everyone to the introduction to swing trading. In this video, I'm going to break down the structure of the course. As you can see here, we are looking at three main parts of this course. In part number 1, understanding swing trading, we're going to focus on explaining what swing trading is, and we're also going to talk about the differences between swing trading, day trading, and long-term investing, as well as the swing trader's mindset. And we will then move into the second part, the fundamentals of swing trading. And here we will talk about about time frames, holding periods, and the technical analysis versus fundamental analysis. And we'll also talk about swing trading in different market conditions. And then finally, we'll move on to part number 3, which is where I will be giving you examples of swing trading setups used in different swing trading strategies. We'll talk about trend trading, range trading, mean reversion, and news trading. Alright guys, I really do hope you are ready, because I sure am. Let's jump straight into the course and begin with part number 1. Welcome back everyone. Now let's focus on understanding swing trading. In this first part of the course, we're going to focus on 3 main things. We're going to talk about what swing trading is, and here I give you the definition and key characteristics of swing trading, and we're also going to talk about the advantages and challenges of swing trading. And we're also going to take a brief look at the differences between swing trading, day trading, and investing. And then finally, something very important for all types of trading, we are going to talk about trading psychology. Now, specifically the swing trader's mindset, while we focus on the key attributes of successful swing traders and also the importance of patience and discipline in swing trading. All right, let's first begin with answering the question, what is swing trading? So what is swing trading? Well, in simple terms, swing trading is all about catching the bigger swings in the markets. Imagine that you're a surfer, but instead of catching ocean waves, you're catching the swings in the market. Imagine that the market moves up and down like waves in the oceans. And as a swing trader, your job is to ride the big waves by getting in when a wave is starting to form and then getting out once it's done. You're not trying to catch every small wave or every small move. You're looking for those bigger, more profitable moves that come less frequently but offer a longer ride. And in swing trading, you're usually in these moves for a few days to a few weeks. Welcome back, guys. To understand what swing trading is, it's also important to understand what it's not. So in this part of the course, we're going to talk about swing trading and compare it to day trading and long-term investing. So let's begin by talking about time frames. Now, swing trading is, like I've said before, when you enter a position with the idea of holding that over the course of a couple of days to a few weeks or even longer. And then comparing this with day trading is very simple. You enter a position and you exit that position within the same day. Now, people that are day traders, they usually want to close the position at the end of the trading session. So if you're trading the stock market, you want to get out of that position before the stock market closes. And if you're trading the forex market, you want to get out of that position when your trading session is over or before the close of that daily candle. And then you have investing and position trading. Now, this is where you stay in a position for a few weeks, month, or even years. Now, a swing trade can turn into an investment. You might want to look at a swing trade and then at your profit targets, you take some profits and then you leave the rest of that position run as sort of a long-term investment. But it's important to differentiate between investing and trading. When you're investing, you're obviously buying perhaps a stock because you believe in the long-term potential of that stock and you're not actively going to trade it. Now, swing trading is almost like investing, but you're more actively trading. And it's also important to remember that you don't have to stay in a swing trade for several days. You can stay in a swing trade for 1 day or 2 days. It doesn't really matter. What matters is the perspective and the plan that you have as a swing trade is that you don't really care about exiting the position at the end of your session. You're okay with holding this position for as long as needed to hit that target. So these numbers or the time frame that I'm giving you here is more of a general guidance to understanding the difference between these trading styles. And then within day trading, you also have scalping. Now, scalping, like I've mentioned before, is when you enter and exit a position within a few seconds or even minutes. Now, of course, scalping can also be when you enter a position and you hold it for a few hours. And it all depends on your personal preference and your plan of the trade. Something that you plan to be a scalp trade can turn into a day trade, and that day trade can also turn into a swing trade, and it's all based on your personal strategy. Another important aspect of swing trading versus scalping or day trading is the timing aspect. The longer you stay in a position, the bigger the risk of outside influence. Now imagine that you're a scalper. You're looking at price action on the low time frames and you have found a pattern that you believe has a high chance of repeating itself. That's your technical edge. And you're going to take that trade because you're in the trade for perhaps only a couple of minutes. The macroeconomics and news events doesn't really pose any substantial risk for you on that scalp trade, if you make sure that there's no major news events coming up within the time frame of your scalp trade. Now, however, in swing trading, because you're going to be in the trade for a couple of days or longer, there is obviously a substantial risk that something unforeseen might happen somewhere in the world that might affect the macroeconomics of your position. And of course, you also have the economic news calendar where you have major news events coming out on almost a daily basis. So the longer you stay in this swing trade, the bigger the risk that something will happen that will turn the macroeconomics against your idea. So simply put, like it says right here on the screen, the longer time you spend in the trade means more exposure to potential economic shifts. And this is something you have to take into consideration. Now, of course, it also comes down to personal preference and personal trading styles. Now, some people just do not care at all about macroeconomics in swing trading, and some people swing trade based on the economic news. Now, we're going to talk more about that later in the course when we talk about different trading strategies. But just remember that this is a real thing with swing trading, and it can become a problem unless you plan for it. And you have a plan on how to adapt to the current sentiment if the market changes. What about the emotional aspect? Is there any difference between swing trading, day trading, and investing from a psychological point of view? I would say that all types of trading requires a high level of discipline and patience. But when you look at patience as a form of waiting, then swing trading is definitely the form of trading that requires more patience. Because in swing trading, you will usually make a plan based on the higher time frames, and a lot of times you will see traders wait for certain high time frame candles to close before making a decision. So if you're basing your plan on the 4-hour time frame, you will have to wait as much as 4 hours for that trade idea to get activated. Now compare this to a scalp where you only have to wait as little as a couple of minutes. And this is why I say, if you are someone with a high level of patience, then swing trading is something you should consider. If you are a person with high discipline, but perhaps not as high patience, then scalping might be better suited for you. So there is a big psychological difference between people that are good at swing trading compared to people that are good at scalping or day trading. And this is important to know because you are always supposed to be trading the trading style and the strategy that works well in combination with your personality. Welcome back, guys. In the last segment of the first part of the swing trading course, we are going to continue talking about trading psychology and expand more on the swing trader's mindset. So let's begin by talking about patience. You already know from the previous section of this course that a key characteristic of a swing trader is the ability to stay patient. And the reason for this is obvious. You simply have to wait. And you might have to wait for a long time. Now, I'm mainly a swing trader, and when I started trading, I quickly realized that I was much better at waiting for the right opportunities to come to me, and I didn't really have the mindset for scalping or day trading. I had a much easier time moving slowly in the markets. And this is where having a high level of patience comes in. You want to have the ability to have an overlook at the markets. You want to make sure that you make your plans based on the higher time frames. And for this to be possible, you have to be able to move slowly. And you have to make your plans and not be too affected by the current moves in the markets. Because sometimes you'll go into the lower time frames and you'll see some moves that you're thinking, you know what, I really want to get in on these moves right now. It's looking like a really good setup right now. But then you zoom out and you know that, for example, this 4-hour candle is going to close in 2 hours, and that will give me much better confirmation on the trade. And also, according to your testing, higher win rate. So you need to have the ability to ignore the low time frame noise and focus on the bigger pictures and patiently wait for that big picture to move in the way you want for your trading plan to get activated. Now, let's move on to the long-term perspective. Imagine a scalper that's transitioning to be a swing trader. And you might have been scalping for a while and you have a perspective of being in a position just for a couple of minutes. Now imagine that you are forced to become a swing trader and your short-term perspective of just being in a trade for a couple of minutes now changes to a long-term perspective where you're going to think about days and weeks. And that is obviously going to be quite challenging. And that is the mindset you have to have as a swing trader. When you're analyzing the markets, you have to have the ability to think about where price might be in the next few days or even weeks or even months. And you have to have the ability to ignore what's happening on the lower time frames and stay focused and disciplined on the higher time frames. So as a swing trader, when I'm analyzing the markets, I'm looking at the daily as my high time frame bias. And now I'm zooming into the 4 hour when it's time to execute a trade. I very rarely go below the 4 hour, maybe the 1 hour. But I know that when I'm on the 15 minute or even the 5 minute, all of that is just noise. It means nothing when I zoom out. The price action on the lower time frames means absolutely nothing to the 4 hour and the daily. And this is what I mean by having a long-term perspective. Instead of thinking about what's going to happen with price in the next few minutes or at the end of the day, think about where will price be at the end of this week or perhaps even at the end of this month. That's a very important aspect of swing trading. And this is something that you will learn to adapt the more you do swing trading. But please keep this in mind and make sure that you're focused on the bigger picture. You're thinking about the long-term perspective of your trade, not to get too caught up in the low time frame noise. All right. What about adaptability? Now, adaptability is an important factor for all types of trading. When it comes to swing trading, it's arguably more important. Because of the fact that you have that high time frame bias, it's important to understand that the market can quickly change. Based on the underlying macroeconomics, it's important for you to adapt to these changes. The best way for you to adapt to these changes is to have a detailed trading plan. You obviously have your stop loss in the setup, but the stop loss is there to protect you if price goes against you. But you also have to have a trade management plan and a trade plan, and take that into consideration the possible shifts in the macroeconomic landscape that might go completely against your overall idea. So let me give you an example. If you're currently in a low interest environment and then all of a sudden the US Federal Reserve decides to do a rate hike, that will obviously have a major effect on the global markets. Changes like these are things that can happen because you are in that swing trade for a longer period of time. It's always important to make sure that you're looking at the statistics of your trading system, you're looking at the profitability of your trading system, because it can change with the ever-changing macroeconomics. So one swing trading system that have worked last year might not work next year. So something that had worked 5 years ago might not work today because that system might have been created or traded in a low interest environment, and now you're in a high interest environment, the markets move much differently. Now, of course, it doesn't have to work like this, but I want to give you an example of things you have to think about as a swing trader, and you need to have plans on how to adapt to these possible upcoming changes. And then finally, we have emotional resilience, which is obviously an important part of all types of trading. But there are some things that are unique to swing trading in terms of emotional resilience. Now, because of the fact that you have longer holding periods in swing trading, where you're going to hold the position for days or even weeks, you will be exposed to very fluctuating unrealized profit and loss. So you might see that one day you're up quite a lot and the other day you retrace a lot of that move. So it's going to be very important that you stay calm during these ups and downs in your P&L. And then, of course, there's a lot of uncertainty in swing trading because of the longer holding periods. Now, you might be long in an asset based on technicals in one type of macroeconomic situation. And then, like I talked about previously, all of a sudden, there might be some changes to the underlying foundations. And here too, you need to have that emotional resilience to really stay calm and rational, and really important here to stick to your trading plan, even when the unexpected happens. Like I've talked about, adaptability kind of goes hand in hand with emotional resilience, because it can be very frustrating when the market changes, and you have to adapt to the changing market conditions. And you know, as a swing trader, it's very important to be able to cut that trade, take the loss, and realize quickly that the market is now in an environment that is different to the market that you entered, and you're no longer trading the same setup basically. So you have to be quick in changing your mindset when letting them and not let the market affect you too much emotionally. So even though emotional resilience is very important in all types of trading, it's important in swing trading for other reasons than in day trading. So hopefully this clears up some of that confusion surrounding that. And this brings us to the end of the first part of the trading course. And in the next segment, we're going to start talking about the fundamentals of swing trading in part number 2. So I would like to thank you all for watching, and I hope to see you all in the next part of the course.